and welcome to Market Leaders. आज हमारी मुलाकात हो रही है एक खास market leader से जो कि है commodity guru Jim Rogers. Jim, thank you so much for joining us on the show. Very first of all, the question on everybody's mind is the commodity super cycle over?
Oh, no, not at all. It will be over eventually. It will be over someday. All bull markets have come to an end. But Gorika, it will not come to an end until a lot of supply comes on stream. Right now, for instance, in agriculture, the world's inventories, the world's stocks are near historic lows. We're even running out of farmers in most parts of the world. So until the supply comes on stream, the bull market's not over.
You know, I've read a couple of your views on why the supply is not coming in. Post-2008, we've had companies in recession. Do you think that the overall condition is likely to improve anytime soon and producers in agriculture, in other areas, could bring that supply in?
The world economic conditions? No, I don't expect world economic conditions to get better anytime soon. In fact, I would suspect that 2013 and 2014 will see worse economic conditions after the American election is over and after the German election is over. I think you'll see worse conditions, which means, of course, that there's not much supply. Now, Gorika, if the world economy gets better, then obviously there are going to be shortages of commodities because we don't have much supply. But let's assume I'm right and assume that the world economy doesn't get better. Then you're going to have most governments printing a lot of money. That's not good for the world. But unfortunately, that's what politicians do. And when people debase currencies, when they print money, the way to protect yourself is to own real assets.
Well, I would like to know, you mentioned agriculture as being one particular basket of commodities which is likely to surge from here on. Besides this, what are the other commodities that you think will do well? Because we have an economic softening pretty much across the board, especially in a big economy like China, which was consuming a lot of global commodities.
Well, China has been trying to cool its economy off for 3 years. They've been very vocal. Anybody who didn't realize that what was going on in China had not been paying attention, because the Chinese had an inflation problem and a property bubble problem, which they were have been trying to cool off for 3 years now. And so, yes, they've been successful at it, and they've been doing the right thing, if you ask me. That has caused demand to slow down in many parts of the world. In Europe, they have economic problems. America has economic problems. So you've seen a slowdown in demand. You've not seen a collapse in prices, however, since we do have supply constraints nearly everywhere in the world. I mainly own agricultural I own all commodities, Gorika, but I mainly own agricultural commodities and precious metals, because I expect more money printing, which will affect the precious metals, and there's serious shortages of agriculture across the board.
In fact, we would like to focus on both of those going ahead in the show, but I'd also like to start with crude oil. That easing of demand that we're seeing from US, Europe, China, do you think that's going to keep prices somewhat subdued? How much of a decline in demand growth do you see in the year or 2 years going ahead?
If you want to see the answer to questions like that, we certainly, whenever there's an economic slowdown, especially worldwide, as we've been having, of course it affects demand for anything, and you have slowdowns. But Gorika, all bull markets go up, they have corrections along the way. That's the way markets work. So we're having a correction in energy, which is normal, which is the way things work. That's not the end of the bull market. As you probably remember, in the stock bull market from 1982 to 2000, we have many very big setbacks. At one point, stocks went down 40 to 80% around the world. It didn't end the bull market. It's just the way markets work. It's not ending the bull market in energy or other commodities as well.
Speaking of energy, besides what's happening in the US, Russia, are you bullish on Russia, especially since it seems to be coming across as a pretty strong player in the energy commodities business?
Well, I've been very skeptical of Russia, and first of the former Soviet Union, and then Russia after the Soviet Union collapsed. I'm still a bit skeptical, a bit questioning, I should say. I find myself, to my surprise, becoming more and more interested in Russia. I'm going up there in a couple of weeks. I'm more interested in Russia. Mr. Putin, I don't think he probably hasn't changed his stripes, but he has started to realize that he has to treat the rest of the world by the rules, or nobody's going to pay any attention to Russia. So it seems to me that there may be positive changes taking place in Russia. I am getting more interested. I have not done anything else, done anything there yet, Gorka, but I'm starting to look.
And when you're looking towards Russia, what all will you be looking at? What all commodities do you think could get attention from you? Is it going to be the agri-basket that you're already invested in otherwise, or energy alone?
Well, energy is the main product that they have to sell to the rest of the world. There could be enormous opportunities in agriculture because, you know, they have huge amounts of land. Now, the communists ruined agriculture in Russia and the Soviet Union, but there could be enormous opportunities there. I don't know what I will find, but I am starting to look. But obviously, commodities is the place that I'm looking. There's not much else up there, I don't think, worth investing in.
Okay, we're going to take a quick break here. Mr. Rogers would like to discuss agriculture and precious metals with you now. Starting with agriculture, you said that you've got a fair bit of your commodity portfolio invested in that. What part of the agriculture basket is looking attractive to you currently?
Well, I own them all, Gorka, but what I would do, and when I invest in agriculture, in any commodity, by the way, I invest in the Rogers commodity indexes because my lawyer won't let me buy individual commodities. So I buy the Rogers Agricultural Index. But if I were an investor looking to invest in commodities, I would start by looking at the things that are most depressed. You know, soybeans have been making all-time highs or near all-time highs. I don't like to buy things making all-time highs. I prefer to look at things that still haven't moved. Sugar, for instance, is 65 or 70% below its all-time high. So I'm not suggesting you buy sugar. I'm just suggesting that if I were an investor looking to invest in agriculture or any commodity, I would start by looking at the things that are still depressed. You know, sugar is down 65, 70% from where it was 38 years ago, Gorka. That's astonishing.
You know, you said that there is agriculture as a whole is likely to do well. The commodity super cycle has not ended. For agricultural commodities as a whole, how much of an upside or how long do you think this bull run could spread?
Well, it's going to go on for a long time. Agricultural prices as a whole have done very little for the past 30 years. The inventories are near historic lows. But, you know, we have serious shortages, Gorka. The average age of farmers in America is 58. In Japan, it's 66. In Canada, it's the oldest in recorded history. We have more people in America studying public relations than study agriculture. Young people are not going into the business. So unless we have much higher prices for an extended period, we're not going to have any food at any price. So the bull market in agricultural commodities has many years to go as far as I can see. Eventually, we'll have a lot of supply, but eventually it's still several years away.
Another commodity that we'd like to focus on is cotton. What is your reading of the kind of cotton supplies we're seeing and the prices that commodity is trending?
Well, commodities had a big cotton had a big run up 2 or 3 years ago, made all-time highs. It has come down sharply since then because people planted more cotton. But I would be optimistic about cotton because the prices are down dramatically from where they were. They still are not high enough to bring in lots of new production yet. The world economy has not collapsed yet. China is a net importer of cotton. So I would be looking favorably at cotton if someone looking at as a potential place for new investments in agriculture. I would suggest cotton is a place to start looking because the prices are down from historic highs.
So cotton and sugar, which you said are two areas that one should be looking at currently. With the drought that we've had in the US, we've seen corn also jump up. Supplies are short, prices are high. Do you think that corn could also be a good bet, or do you think that prices have already jumped up to levels where the race is pretty much done?
Well, you have said it all, Gorka. Corn prices have gone up dramatically in the past couple of months. I don't like to jump on a moving train. When things are going through the roof, I don't like to buy. I like to wait for something to cool off, calm down. If it doesn't calm down and I miss it, it's okay. It's not the end of the world. But I have learned in my investment experience, that if you jump on a moving train, you're probably going to get hurt. You either miss it or you wait for it to correct.
The entire edible oils basket, you know, we've seen soybean. You mentioned that soybeans had a pretty good substantial run-up. Now in India, we're seeing domestic prices also going up, pretty much because the entire basket moves together. Do you think that the kind of situation we have internationally could see a bump up of say 5 to 10% in edible oils from here, or would it be higher than this?
Well, soybeans, as you point out, the whole complex of oils has moved up together. To repeat, I don't like to buy things that are moving up. I like to buy things that are moving down. So I would be careful. I would be very careful right now. But if they react and if they correct, then yes, possibly buy it. But Gorika, I don't want to buy anything for a 5 or 10% move. That's not the way I invest. Now, there are many short-term traders who make brilliant amounts of money as short-term traders, and a 5 or 10% move up is great for them. It's not my way of investing. I like to find things that are going to go up for many years and go up many, many percentages.
Okay, so sugar and cotton would possibly be be among that list. We're going to take a short break here. जिम रॉजर्स से बातचीत हो रही थी कि कैसे उन्हें एग्रीकल्चर और प्रेशियस मेटल्स पसंद हैं. Mr. Rogers, we would like to talk about gold now because that is a very favored commodity in India, especially among the retail buyers. In gold, what are the elements that are in play? Is it the civil war in Syria? Is it the tensions in Iran? How is this commodity going to behave from here on?
I own gold. I am not selling gold. Whenever gold goes down, I buy more. If it goes down a lot, I hope I'm smart enough to buy a lot more because the price is going to go up much higher over the next decade. Gorika, politicians around the world are printing a lot of money. That's the wrong thing to do, but that's what they're doing. And whenever they print money, a way to protect yourself is to own gold, silver, platinum, palladium. Any precious item will protect you in periods like that.
The other, you talked about printing money. You talked about governments trying to put money in. Everybody's got their sights on the Federal Reserve and on the quantitative easing, the third round that they're expecting. What is your reading of it?
Well, I know that they're going to do it. They may try to disguise it. They may not even announce it. They may do it under other names. But I know that the Federal Reserve's balance sheet in America has been going up over the past several months, several weeks. So the money's going into the market from the Federal Reserve. They have not announced a broad public relations campaign yet. And it may be, Gorika, because, the first two times they announced it, quantitative 1 and quantitative 2, it didn't work. It didn't help the economy. Unemployment is still very high. The economy is still very weak. So I think they're a little gun-shy. They're a little embarrassed that they failed so far. So they probably may not even announce it. But they're going to do it, Gorika. They're going to continue to print money, just as the Japanese and Chinese and Europeans and even the Indians will continue to print money going forward.
Mr. Rogers, we'd also like to know about silver. It has moved up somewhat along with its big brother gold, but it's been pretty subdued. The outlook on this commodity on a standalone basis, also in comparison to gold, which has run up so much more.
Well, of the two, if I had to buy one today, Gorika, I would buy silver. Sorry, I'm losing my voice. Silver is about 40% below its all-time high. Gold is about 10 or 15% below its all-time high. I usually prefer the things that are cheaper. I'm not buying either today, but if I were buying one today, Gorika, I would buy silver on a valuation basis. I own them both. I'm keen on both. Both will go much higher over the next decade. Silver at the moment happens to be the cheaper of the two.
What is going to give silver the kick up going ahead? Is it going to be some amount of industrial, consumption, which we could see possibly coming in once this entire political or economic political tangle sorts itself out in the Western Hemisphere?
Well, it'll be a combination of the above. I don't know that the world economy is going to get much better. I'm skeptical of the world economy over the next 2 or 3 years. So that would not be a big boost for silver, since it is used in industrial applications. But there's going to be a lot of money printing. Since it is cheaper than others, it will probably catch up on a percentage-wise and do better than gold going forward. Silver is still considered a precious metal. It is a precious metal. Lots of people like silver, especially in India, especially in many parts of the world. You know, historically, Gorka, India has been much more popular worldwide than gold, partly because there's a lot more silver in the world. But in parts of Africa, even in America, you know, the American Constitution started off based on silver, not on gold. Gold has been very popular many times in history, but silver, for the most part, has been more popular. Don't sell your silver, Gorka.
Okay, we will hold on to our silver. A quick call on crude, because we have the U.S. trying to get as much of it as it needs from its own domestic wells and domestic production. In terms of prices, where do you expect crude oil to work globally?
If America goes to war with Iran, crude's going to go to 200. If Spain goes bankrupt next month, or some big surprise occurs in the market, then crude could go to 80 or 70. Who knows where it would go? It's some kind of sudden bankruptcy. Depends on world conditions. When crude goes down, I buy more. If it goes up, I sit and watch, because I do know that crude is going to go over 150, over $200 a barrel, U.S. dollars a barrel, over the course of the decade. I'm just not very good at market timing. Gorka, I'm the single worst trader you will ever meet. I'm not any good at that, but I own it, and I don't plan to sell it for a long time to come.
Jim, give us a quick idea in terms of portfolio. What we gather is you love agriculture, you like precious metals, and you like crude for the decade going ahead. How much of your portfolio would you allocate to each of these at this current juncture?
Well, it depends on the investor. I have a lot of commodities in my portfolio. I mainly am long commodities, and I'm long currencies, and I am short stocks in my portfolio. But Gorka, if a person cannot spell commodities, they shouldn't own any commodities. You shouldn't own anything that you don't know a lot about yourself. I happen to be very bullish on commodities. I think I know what I'm doing. I think that the big shortages are developing, as I said. Whether the economy gets better or doesn't get better, I want to have my money in commodities. But if you don't know anything about commodities, Gorka, don't own any commodities. Don't listen to some guy you see on TV or you read in the newspaper. Only invest in things that you yourself know a lot about.
Jim Rogers, thank you very much for taking time out and joining me and our viewers on CNBC Awaaz this morning.
Thank you, Gorka.